yes, they're awesome rates, but just going by like rate and payment and sort of the who the lender is like a good analogy. It's like walking in to buy a new car and you're like, I want to pay $500 a month. I want 3% interest rate and I need it to be a Ford. Then the dealer goes, okay, awesome. And then you go, okay, wait, what did I just buy though?
All right, hey Zach, how you doing?
Good, man. How are you?
Good, good. You been busy the last few weeks?
Yeah, a few new purchases going on. Some refinance stuff still happening. So it's been good.
Amazing, amazing. So I wanted to reach out to you and talk a bit about mortgages. So what did you want to share today about?
We're going to talk a little bit about just like the interest rates being they're crazy low. I mean, historically kind of low interest rates, especially the variable rates are going crazy. Um, and that sort of in general and what people should look at, like not just jump on those sort of teaser rates that are out there and still kind of read the fine print. And then maybe you want to touch about a little bit about pre-approvals, something like that. Okay.
Yeah, I think that's a great topic right now is those teaser rates, those super low rates that gets everyone excited, makes the headlines in the news. But what should people know about them?
So really it just comes down to, yes, they're awesome rates, but just going by like rate and payment and sort of the who the lender is like a good analogy that someone else told me about, but I like to repeat it now. It's like walking in to buy a new car and you're like, I want to pay $500 a month. I want 3% interest rate and I need it to be a Ford. And then the dealer goes, okay, awesome. And then you go, okay, wait, what did I just buy though? Is that an F-150? Is that a Fiat? Like, what am I actually? So that's kind of like what by just going by those rates, you're like, oh, awesome rate. Oh, my payment's gonna be so low. And it's, I won't name a lender, but it's like, yeah, okay. But you're not really looking at all the other factors like penalty, prepayment, like is it portable? Is there is the absence or presence of a bona fide sales clause, collateral charge term? Like there's so many of these other things that you need. Not everyone's going to want to know about all of those things, but some things are important to different people.
Yeah.
Right. So just going upon, 199 or 194 or 1.7 like variable now, that's great. But like, what are all these other terms? And that's why obviously plugging myself or mortgage brokers in general, talk to a mortgage broker, read that fine print. Even if you don't, read that fine print and make sure you know what you're getting yourself into ahead of more so than just that rate.
Yeah, absolutely. That's a great point. And you know, I hear the horror stories of exuberant break fees and situations where the clients can't port the mortgage or the fee to port is not reasonable. I mean, when a client comes to you and asking about this rate or excited about this low rate, what kind of clarification questions do you ask to help kind of determine what's important to them in their mortgage?
Well, that goes into, talking about their goals pre-hand. Like, are we buying this house to then just to upgrade? So we're going to move. Is there a chance you're going to refinance? Because if you are going to refinance, then you're going to have to, pay those penalties, or are you going to, or just to keep even in a low break penalty, just so we can potentially switch you to a better product, is always just a good thing to have as an option.
Yep.
So it's a lot of just talking about their goals, and then really a good way to put it as well, because so many people are stuck on rate, is put it into a dollar amount. It's like, is this $7 or $8 biweekly that you're really going to save with this 5-10 basis points difference? Is that worth the potential of $6,000-$7,000 in loss during your term of your mortgage? Right? It's like insurance almost. Like no one buys insurance hoping something's going to go bad so that they get paid out on the insurance. It's that, is paying that little extra $10-$20 a month with better terms. Is that going to be worth it for you? Is that part of your long-term goal strategy?
Yeah, that's great. Like, it's that kind of perspective on what is their goals and getting the client, I guess, reacquainted with or refamiliar with what their actually objective is and what could come up during that time. Whether there's a cosigner sign-in that they're going to want to take off, whether they're going to want to move and upgrade or invest and refinance, like keeping that on the top of their mind to say, hey, this is what you need to look at. It's not just about what you're paying monthly.
Yes. Exactly. Especially people that are trying, maybe looking at it for the investment side, and they're going to want to build that equity, and they're going to want to take that money out to buy another property. Those people are going to want more flexibility with it in terms of penalties and prepayment options and things like that.
That's really great insight, Zach. And I mean, we've been talking a lot about pre-approvals right now. I think a lot of people buyers are coming out of the woodworks, really excited. The weather's beautiful. Properties are finally being listed. So, I guess you're dealing with a lot of pre-approvals. What are some of the biggest questions you're getting around buyers from about their pre-approval?
Not so much questions as opposed to like people not realizing sort of what they actually qualify for, or not realizing, or just not being as prepared enough. Like a lot of like learning about cost in addition to down payment, those kind of conversations. And also just being generally, if we want to make it happen fast, right? You want to get pre-qualified, pre-approved, and start kind of looking. So a lot of the things, just to qualify my clients, or in my initial conversation, I'm going to kind of tell you, like, let's get all your docs together. Let's get some ID. Let's get proof of income. Let's get, if you're self-employed, T1s, T4s, bank statements, that stuff. Let's get that all compiled up front so I can actually get the pre-application in, or pre-approval in, sort of get the ball rolling. And then it's a good thing also to tell them like what not to do, like the sort of do's and don'ts with the pre-approval. Once we do have you in, or pre-approved, or even just pre-qualified, don't go ahead and make big purchases. Don't go take out new lines of credit, stuff like that are going to affect the ratios and screw up what we already have pre-approved.
Yeah, no, that's actually a really good point, because I don't think many buyers think of that as they're going through the process. When they come to me, at least, the first step I tell them, hey, is go speak to your mortgage broker. If you don't have one, I provide contacts to great mortgage brokers like yourself, and say, this is who you need to go to. And I don't think they stop and realize the involvement that they need to have in terms of getting their documents ready, having everything lined up, and then not changing anything once they have that all lined up.
Yes, definitely. They're not change, especially like people don't realize, you get this all set up for them, and then they go in to put an offer in on a property, and they're like, oh, by the way, I quit my job and I started a business independently. Like, well, okay, now like, good luck. I wish you the best. Talk to me in 2 or 3 years when you have when you're financially stable again, and we can maybe get your process started again for you. So it is that people just kind of don't realize that these are the factors. Like, things need to be concrete, and they need to be also historically you've been making the same amount of money, or you're increasing your salary, or things like that.
Yeah. I mean, the bank is essentially, loaning you money based on what what you're showing on paper, right? And so they want to have some security. And if you're changing any of that, right, it takes away that security that the bank has.
Yes. Yeah, exactly. And even if it's not necessarily like all on traditional income, like if you are business for self, like there's products we can use that are business for self products that will use bank statements instead of your tax returns and things like that. Like, we can move that around, but it does have to be consistent, and it does have to prove that you're not just like getting a random income from random places, and things are concrete.
Yeah, 100%. I mean, that's some great insight. And I appreciate that. I mean, I think a lot of people don't realize this kind of information, to stop and take the time and listen to this video. Really, I think will really help a lot of buyers out there as they're going through the process.
Yeah, excellent, for sure. And I'm always open for questions about this as well. Phone call away. So give me a shout, and I can walk them through even more details around the process anytime.
You're great for that. I'm going to provide all your contact information and links and stuff below, so people can reach out to you. And I think you're a wealth of information for that kind of stuff. And you really do take the time and the diligence to walk people through this.
Awesome. Thank you very much, Paul.
Yeah, of course.